Welcome to Short View Trading. This is your morning market hit for Monday, 16th of October. My name is Chris Watling. I'm the CEO and Chief Market Strategist of Longview Economics and Short View Trading. And what we want to get into in this video is how do you go about trading equity markets on a 1 to 2 week basis? If you're a swing trader and you want to trade equity index futures, S&P 500 futures or FTSE, DAX, or NASDAQ 100 futures or similar indices like that, what do you need to look at? What do you need to think about? What factors do you need to watch? Fascinatingly, if you look at markets, the price action has been intriguing in the last couple of weeks. Markets really trying to rally from major local lows at the beginning of this month, or certainly what seemed to be major local lows, but then starting to fail in that rally at the back end of last week. We saw on Thursday and Friday some breakdown in the price action. The S&P 500, for example, failing to push through its 50-day moving average and failing at that resistance level, giving back some of those gains at the back end of last week on Thursday and Friday. Equally, the NASDAQ, it had looked perky, it had seemed to be breaking through and then pulling back to that level. And many of the Magnificent Seven, the key tech stocks, the big cap, mega cap tech stocks, which have been driving the NASDAQ high over the course of most of this year, struggling at key levels. Look at Facebook. Looks like it might have put in a double top over the last couple of trading sessions. Or equally, look at Apple, moving and testing at its 50-day moving average. Similar comments about Tesla. So it's not clear that markets are in an uptrend at all, and many of them are starting to fail at key levels. And indeed, if you broaden out the horizon of indices that you look at and you start looking at the small and mid caps in the US, many of them poised at critical levels, critical support levels. Just look at the Russell 2000 touching at its closing price on Friday, a multi-month support level that's been tested a number of times. It'll be fascinating to see how that price action plays out over the course of the next few days. And with those markets poised at key levels, risks are very two-way. As we saw with the oil price on Friday, dramatic rally, 5% or so on Brent and WTI futures on the back of concerns about what's going on in the Middle East. How will that conflict play out from here? Will it start broadening out and bringing in more of the local regional powers into the action, into the war, into the conflict in the Middle East, in which case it's likely to have a pretty dramatic effect on the oil price and be a negative for equity markets? That's a key risk, and that was reinforced over the weekend by comments from the Iranian president warning against what Israel is up to in Gaza. Or equally, on the flip side, as I say, it's two-way risk. US equity earnings, the quarterly earnings season underway, kicking off on Friday in earnest with the major banks who mostly did better than people expected. So that earnings season could provide a bit of support for equity markets, whilst on the flip side, the oil price and the situation in the Middle East could deteriorate and could be a cause of real concern for the equity market. So risks are two-way. So how do you go about judging these risks? And of course, that's the benefit of using our 1 to 2 week market timing models. The risk appetite, fear and greed index, as well as a number of other 1 to 2 week market timing models that give pretty good insights and help you tilt the risk reward in your favor for being long or short equity index futures. Just take a look at the NASDAQ 100 technical scoring system. This is a model we use and look at each and every day. It aggregates a number of technical models, scores them, puts them all together and comes up with a signal with some standard deviation bands. As you can see, it's been picking up the rhythm of the NASDAQ pretty nicely over recent months and weeks. And over the course of the last week, we've had a sell signal and the market started to pull back to reflect that. That's one of many models that we look at each and every day in the Daily Rag. For a free trial of the Daily Rag, please click on the link below. We'll happily send it to you for a bunch of trading sessions for free. No credit card details required, just your name and email address. And you can work out if you're interested in subscribing. Equally, if you're a subscriber, you should have it in your inbox around 8:30, 9 a.m. London time, each and every trading session. But it's these models that we go to each and every morning, along with a narrative about how we see the market, how it's playing out, how we expect it to evolve over the next week or two, and an explicit recommendation on equity index futures, either long or short, or watch and wait occasionally whilst we observe and we wait for the models to give a decent across-the-board signal. So what are we watching over the course of this week? Well, there's a number of themes. There's certainly a US housing data theme with existing home sales starts and permits later this week. Elsewhere in the States, we've got Chairman Powell giving a speech to the Economic Club of New York, and a number of other bits and pieces of US data and other Western data that's key. Second big theme is really US quarterly earnings seasons continues. We've got a couple more banks, Bank of America, Goldman Sachs, as well as Tesla and one or two other key stocks out over the course of this week. A whole bunch of S&P companies reporting earnings, but those are probably the highlights. And then, of course, finally, all eyes on the oil price and the conflict in the Middle East. Critical to see how that pans out and how that may influence equity markets and prices more generally. So that's it from us. That's your morning market hit for Monday, October the 16th. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button, like and share on social media, or follow us on Facebook, LinkedIn, and or Twitter. Thank you for listening. Stay safe. Trade well.